Exclusive chat with my colleague Ajay Sharma. The top bosses at Poonawalla Fincorp shared their roadmap for growth, saying that they remain well capitalized and will be able to achieve their targets. Here's an excerpt of that conversation.
This is a very special interaction today we are bringing for you from a group which has done some phenomenal work in the last couple of decades in the area of medicine and vaccines. During the time of COVID, not only for the country, but also for the world. But today, the interaction is focused about their scaling up of their financial services business. I'm talking about Poonawalla Fincorp, and I'm right here at the headquarters of Poonawalla Fincorp in Pune, in conversation with Adar Poonawalla, who's joining me this morning. Adar, thank you very much for your time.
Pleasure to be with you.
So I've always wanted to talk to you in detail about Poonawalla Fincorp. Briefly, we've chatted about it. When you were really acquiring Magma Fincorp till now, so the journey of taking that step, people questioned you that you've done phenomenal work in medicine, why financial services now? And now that the numbers are coming in, talk to us about how that decision was made, the journey so far, and are you satisfied the way things are shaping up?
That's a good question. When we acquired the group 2 years ago, people were quite skeptical. Why am I diversifying into something that is totally new or different to us? But the financial services is something that I always wanted to get into. I just didn't know and have the right platform to be able to scale up. When we looked at this group 2 years ago, we felt that this would give us a 5-year leapfrog into the financial services with the branches they had, the team they had. Of course, we've come a long way since then and rejigged all of that and changed the team. We've reduced branches, we've gone more digital. And we'll talk about that. But the idea was that India, the way it's growing, the financial services is a very fundamental part and a backbone of being able to help and support everyone's dreams and aspirations. So to grow with India, with the growth story, we felt that the financial services sector is something that we had to look at, and that's why we went into it.
So Adar, now as the company stands, it's pretty strong in terms of balance sheet, well capitalized. Numbers are talking for themselves. What's the big picture plan here? You want to scale it up into a full services, financial services powerhouse backed by fintech. Talk to us, give us some color on how do you want to scale it up?
Well, right now I've been focusing on becoming efficient and profitable. You've seen our profits grow quite well, and it's more than 500 crores the last year ending. And we started off with a loss of 600 crores. So apart from rejigging the team, the products, right now it's mainly into loans, different types of loans, of course. We're thinking about having an app and on the payment side going more digital as well, along with collections, which is now 100% digital collections. There's no physical collections like it was when we took over. So a lot of changes. And well, we'll see what other products we want to get into, but right now I think focusing on loans will be the primary objective. And of course, small ticket loans. We're not talking about going into crores of rupees with real estate developers and infrastructure loans. We're talking about going up to 50 lakhs, 1 crore or whatever, if they're secured sort of loans. And as you know, with the housing business, which we have now sold to TPG, and we got the approval from RBI also, that will help us to focus more on the NBFC business. And the housing business is something we said it's better that someone else looks at that.
Sure.
And look, the cash that we're getting also, as you rightly said, has really added to the capitalization of the company. The net worth is going to be 8,000-9,000 crores after the taxes are paid for this transaction. And we're hardly 1.5 times levered. So
the scope for
the scope over the next 3 to 4 years again allows us to grow without having to raise any capital. We can easily reach an AUM 40 to 50,000 crores in that time span, the way we're growing. And if you assume 30 to 40%, which is a good growth rate, it's not too much. You don't want to grow a finance company too fast, because then you might make a few mistakes and take too many risks. So keeping that in mind, I think over the next 4 to 5 years, we probably won't even need to raise capital.
Now we'll take the discussion forward with the MD and CEO of Poonawalla Fincorp, Abhay Bhutada, the guy who is under whose leadership Poonawalla Fincorp and the financial services ambitions of the Poonawalla family are going ahead. Abhay, thank you very much for joining us today.
Thank you, Ajay.
So Abhay, I want to understand from you, and market also wants to know, what are the key differentiating points in your products at your company, which will be, your company or Poonawalla Fincorp, which you are leading, will be different than other NBFCs or even other lenders, including some of the banks. How are you going to create that differentiating factor?
Very good question. I think we have a unique positioning in the market. Despite of we are into NBFC sector, the segment which we are targeting is one notch above the segment of what the sector is targeting. We target 700 plus CIBIL customers, formal income segment. We get a lot of data points, those who are paying GST on time, TDS on time, lot of other digital footprint we get PDF banking, and most of our product except loan against property, they are 100% digital end to end. Only in pre-owned car you require certain signature on RTA hypothecation form. Otherwise entire agreements are digital only. So major differences is a customer centric approach wherein we offer zero prepayment, we offer lesser rate. We want to eliminate money lending in a big way. With that thought in the mind, I think the customers are very happy. Customer stickiness, loyalty is very important in a longer run. So we are able to offer a combination of the fintech, NBFC and bank. Why I am saying this? Because fintech, in terms of what you need is a user experience. Sure. So 100% digital sourcing. Then what you need is a practical approach, cash flow based lending. So we behave like an NBFC. We understand, we have done. We have completed 2 cycles, 3 years of TAP, 2 years of Poonawalla Finance, here 2 years. So we have unsecured, we have completed 2 cycles, which very few people are aware about the past history of running this to NBFC. And why I'm saying bank? Because we behave like a bank, we have creating a structure like a bank, we are targeting customer of a bank. Because of the low OPEX, because of the less cost of fund, we are able to target that segment. We do early write-off, so there is a pressure at the time of onboarding itself. So it's like credit by invitation. And on the basis of our past experience, we are confident to maintaining the good asset quality.
You spoke about fintech and digital. Your experience prior with digital and technology. How are you building all of that into the business model of this company? And Adar was also talking about how this company is likely to evolve into a full-scale fintech going forward. What are your thoughts?
So basically, from TAP to Poonawalla Finance, we have developed CRM and we have developed LOS, LMS, collection and a lot of other softwares. On the basis of that, I think data-driven lending, what we are talking about, everybody is talking about nowadays. I think we have got good experience into that, and on the basis of that, I think the going further, we will evolve this into a full-fledged fintech in terms of, because we have a very strong risk management, we have a collection infrastructure, we get a lot of digital footprints, and over and above that, in terms of WhatsApp lending, in terms of servicing of the customer through WhatsApp. And if you talk about the app, so we are launching a super app wherein you will get not only borrowing but a lot of other value added services, payments and so many other things, so that you will get one-stop solution for everything. So I think going further, I think we will not talk about tech, we will talk about the high tech.
Interesting. Not only tech but high tech. We understand that you're likely to receive the proceeds of the transaction very soon, the 5,000 crore odd, which will also improve your net worth a whole lot as a company. Close to 9,000, 9,500 is what we understand it is. When is that likely to come? How will it improve, and what will you do with that money? There is also some talk that probably you'll utilize it for buying out other companies. Is that a possibility as well?
I think whatever long-term guidance we have given of 35 to 40% growth. So over a period of next 5-6 years, if we are not raising any primary capital, the kind of leverage which is less than 2 we have, and with this 3,900 crore and pre-tax will be closer to approximate 3,000 plus crore.
Okay.
So that will get added to the net worth. But I think we will continue with this capital. Right now we have a good team and technology. We are able to scale up. We are doing more than 2,000 crore per month of disbursement. So I don't think so. At least for next 2-3 years, we are not looking for any kind of inorganic opportunity, and we will continue with this capital, and it will require for the further growth.
So Abhay, the company has come so far with the numbers they are. At this base, what are the kind of growth possibilities do you see for the company and also the space you are operating in?
See, basically, if you see last quarter, our AUM was 16,143 crore. So from 16,000 to 1 lakh crore, there are very few NBFCs are there. So we have a huge opportunity. If you see the total addressable market on the consumer side, on the MSME side, even though we are targeting a credit tested customer formal income segment, but still considering 1.5 crore plus GST user base, ever sir 42 crore of bureau base, a live database of bureau is almost 20 to 23 crore. So considering that, we have a diversification of products, secured, unsecured. So 35 to 40% we are confident for over the next period of 4 to 5 years. We don't see any problem because the base is very low and total addressable market, if you see, huge opportunities there. And I believe the credit growth will be very good over a period of next 7 to 10 years. So I think we don't see any problem for next 5 to 7 years to maintaining that growth with, of course, maintaining the good asset quality also.
And Abhay, though we talk numbers with you every time quarterly results are out, but directionally, the kind of NIM and ROA structured kind of growth you see from here on, also with the point that your legacy book at Magma is actually being run down, right? So where do you see the direction of NIM and your ROAs from here on?
So in the recent investor call also, we always maintain that on a steady state basis, NIM will be able to maintain above 10 on a going further. And if you talk about the ROA, anything between 4 to 4.5%, but on a steady state basis, we'll be able to maintain above 4%.
All right, Abhay, thank you so much for your time today.
Thank you.